Hello and welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Vivek Iyer, and I think today, they're going to say, thank God it's Friday, right? But at least today will mark the end of the selling pressure for this week. For this week, and it's been such a brutal week. Or the color on the screen has changed since morning.
That's right.
In the morning, it looked like a stable start, and now we've completely wiped out all gains. On the Midcap index, the fall pretty much started immediately in the first 15-30 minutes of trade. On the Nifty Sensex, we were holding up till about 10:30, and then we've started collapsing. Literally, it's been like a waterfall kind of a decline. Now, for the week to date, that so far this week, the Midcap index is down nearly 7%. The Nifty is inching towards a 2.5-3% kind of fall. The small cap index has seen a cut of more than about 8%. And it's not that the global markets have capitulated or, seeing this kind of weakness. In fact, Hang Seng is up 5.5% this week. The Korean markets are up nearly about 3%. Chinese markets are up 1%. Taiwan is the only one which is affected. But again, the cuts are 1.5%. Nowhere comparable to the 3-7% kind of fall that we are seeing in India, and it's relentless across the board selling pressure. So barring the FMCG index, which is holding out with a slim gain of about 0.2%, all the other sectoral indices are deep in the red.
Good morning, Reema. You mentioned it very well. We are significant underperformers to the kind of performance that other emerging markets are seeing. Well, what is one particular pocket of the market that's seeing most selling pressure? It's actually the pharma index. Have a look at some of the pharma stocks. Natco Pharma, yesterday, was at the lower circuit. Today, down another 10%. Laurus Labs, Glenmark, Lupin, Granules, all of these names, all of the stocks from the pharma pack. Remember, any kind of tariff impact over there will have significant repercussions, and that uncertainty is something that has seen, quite a bit of a sell-off as far as the entire pharma pack is concerned. The other set of stocks that are falling are stocks that are falling on the back of very muted Q3 numbers. First on the list, Deepak Nitrite, a significant weakness seen across most verticals for this particular name. So that stock is down over 14%. Concord Enviro, a recent listing, a company, the wastewater management system, that stock is at the lower circle. Manappuram Finance, remember the stock is in the F&O band, but has seen significant weakness, down over 9%. And like you mentioned, Reema, the only pocket of the market that's managed to hold out to some amount of green is actually the FMCG space. And United Breweries, despite a muted set of numbers, has recovered quite smartly.
Senco is down another 20%. From the beginning of the year, Senco is down nearly about 34%. Swiggy is, under pressure, 333 on that. PN Gadgil came out with numbers 2 days back. The stock was under pressure yesterday. It's fallen a little bit more today. There is really no stop to the kind of weakness that we're seeing in the markets. But Kalpataru Projects reported a good set of Q3 numbers. Revenues were up 17%. The company's profit after tax, though, was impacted by higher effective tax rate and higher finance costs. Amit Uplenchwar, director at Kalpataru Projects, is now with us on the show. Amit, morning, and thank you for joining in. The first question is on your revenue guidance. When we last spoke, you had guided for a 20% kind of a top-line growth. First 9 months, the revenue growth is 9%. So what happens to your full-year revenue growth? What is it we're now looking at?
Good morning, Reema and Vivek. To start with, we had guided for 20% at the beginning of the year, but let's face it, Q1, Q2 were slow across the board, especially for infra companies because there was a protracted long election in several phases. And because of that, there has been a capital allocation to some of the sectors which are heavily government dependent, like water, etc., didn't grow the way we had anticipated at the beginning of the year. We had, as against the 66,000 crore deployment over a year and a half ago, just 20,000 crore up till today in the water business. So barring water, if you see, all our segments have given 20 to 40 to even 99% growth in revenue until 9 months. But because of this water, we've had kind of a setback because we couldn't grow the business. There was no allocation at all from the government, or very little. Hence, we are at 9% today. But if you see the projected water shortfall, we would have, been at 18-19%. If you look at the end of the year, where we are, we've had a great Q3. We've had, phenomenal growth on revenue, EBITDA, PBT, all around. And I think Q4 should continue in that fashion. So I think 12 to 13% is where we should end at for the full year in terms of revenue.
Okay, so from starting off with expectations of close to 20% growth, you're looking to end the year in the range between 12 to 14%. And we believe a lot of that execution will be back-ended in H2. Q3 has seen significant improvement in revenue. Q4 also you expect that momentum to sustain. Now, coming to the margins, what is the margin trajectory you're seeing? Q4 and FY25, where will you end EBITDA margins at, and thereby where will you end PAT margins at?
So, luckily, so far as our PBT is concerned, we've always said that we will try and be around 4.5 to 5% for full year FY25. And I think we will maintain that guidance and get to 4.5, 5% towards the end of the year. I think in Q4, we should be inching almost close to 5% as, the execution picks up, better margin execution. So I think there is no shortfall in guidance. I think we will achieve our full 4.5 to 5% in between the PBT for the full year.
And at EBITDA margins also between 8.5%, that holds?
So that also holds. The objective is to try and make that better, maybe by 30 or 40 basis points in Q4. But I think our EBITDA will hold, so will our PBT, except revenue, which was totally beyond our control for lack of funds from center to various utilities of states where we have orders. But that also should pick up, hopefully, going forward, now that there is again a very large allocation in the budget of close to 65,000 crores for water. I think starting Q1 of next year, this should come back again. Because as you know, we already have a 10,000 crore rupees order book in water. So I don't see runway in terms of growth being a challenge because the orders are already there in hand.
Amit, not only have you, but even peer companies have indicated that there have been significant shortages in collections as far as this particular segment is concerned, Jal Jeevan. So going forward, a couple of peer companies have actually mentioned that they will take a halt in going ahead and participating in these tenders. Will you continue to participate? Has there been any improvement in collections? And secondly, what is the order prospect pipeline as far as the domestic space is concerned, especially FY26? We want to get some visibility as far as the order inflow is concerned.
So, Vivek, right now we are sitting at a very, very comfortable order book of in excess of 16,000 crores. We are guided at 22 to 23,000 crore full year guidance for order intake for FY25. And we already are at 20,000 crores YTD and L1s of another 2,500 odd crores. And I think we will again meet our full year order booking guidance as well. Going forward, I think, the segments of transmission and substations, our BNF segment, urban infra, oil and gas, all are looking very, very robust. Even in case of water, I don't see a slowdown in projects. We anyway have a very comfortable order book of, 3 years currently sitting with us. And going forward, looking at the allocation in Jal Jeevan Mission, as you mentioned, there seems to be a very large allocation in the budget, so there's no reason why those should not convert into orders going forward as well for next year.
So water was, of course, the big problem area for you, but a very relatively a smaller one, railways. That's, I think, just about 4-5% of your top line. That also saw a revenue decline in Q3. What was the reason for that? And is that going to be a pain point for you going ahead?
So, Rima, we've always said that we want to be cautious on our railway guidance. There has been extreme competitive intensity in the railway business over the last 2-3 years. And we are cautious, we'll bid selectively. So far as this Q3, there has been a little bit of a miss on railway, and that's primarily due to our project in Bangladesh. And as you know, the situation in Bangladesh was beyond anybody's control the last 2 quarters. But again, the projects have picked up, things have seemed to regain normalcy there, and that should come back again on stream.
Amit, one last question. There's been a lot of worries in terms of bidding, actually being quite muted when it comes to Saudi. So export part of the business, has there been any slowdown in bidding? What is the prospect pipeline for FY26?
So, like I said, Vivek, we are already at one of the highest ever order books that we've been sitting at Kalpataru. Our order intake has been exactly where we thought it will be at the beginning of the year. I don't see any of that slowing down either in our domestic book or international book, considering that BNF, transmission, oil and gas, urban infra, all are showing extreme promise in terms of the next, not just year, but the next 3-4 years. And I think being a large player in that segment, we continue to be very optimistic as to get a fair share of that opportunity that lies ahead of us.
Thank you so much, Amit, for joining us, giving us a sense of how Q3 panned out. Some moderation in terms of the guidance as far as FY25 is concerned, but the order book quite strong at the end of Q3. Time now for a short break. We'll be joined by Ankit Thakkar, CEO of Jupiter Lifeline Hospitals, to discuss the company's third quarterly performance. Welcome back to Trading Hour. Well, what we're seeing on the markets is that we're seeing a continuation of the kind of sell-off, especially as far as the broader end of the markets. The mid-cap index is down over 2%, and the small-cap index too is down over 2.5%. What are some of the stocks that are seeing significant selling pressure? Well, the first stock on the radar is actually Deepak Nitrite. Now, that particular stock, remember, came out with a very muted set of numbers. We highlighted it at the start of the show. The selling pressure has actually intensified, now down almost 15%. Two companies are similar sounding names but in different businesses. Concord Bio, this particular company from the healthcare space, that stock is down almost 13%. And the other stock that we mentioned at the start of the show was actually Concord Enviro Systems. That also came out with its numbers, and that stock too is at the lower circuit of the day. Manappuram Finance, weak set of numbers. The stock is in the F&O space, is in the F&O band for the day, but that stock has taken a knock of almost 10%. Natco Pharma down 10% after a 20% fall that we saw yesterday. The company gave weak guidance, especially as far as Revlimid sales are concerned. But moving on, as we wrap up the Growth Code, an initiative by Grow and CNBC-TV18, we want to help traders understand the risks of trading in illiquid options and how to manage these.
F&O trading is on the rise, with market volume growing 30 times since 2018. But many traders are unaware about the risks of illiquid options.
Majority of the retail traders are jumping onto those options where liquidity is less, because that's where they can see the movement of an option price is very, very high and heavy. Now, there is a lot of problem with something like this.
Intraday price variation in the F&O segment can be anywhere between 200 to 2,000%, with record movement of even 39,900% for one illiquid stock option. With price swings so wild, these illiquid options can erode your capital in seconds.
You need to be aware that the option can become illiquid if the underlying stock prices move too far, too fast. So you have to be careful about that the options are not exercised, because then a huge amount is required, else you will be penalized.
Illiquid options have also become extremely attractive for manipulators, compounding losses of unwitting retail traders.
I would say SEBI has been doing everything it takes to curb that manipulation, but it can still happen. And it's very important that retail traders should understand these kind of manipulations happen.
Periodic call auctions have been brought in to curb volatility, and SEBI is extremely active in penalizing manipulation of illiquid options, at times passing an average of 3 orders a day.
Firstly, what you have to do is check the open interest of that specific strike. Does it have enough open interest buildup? Secondly, before the event, like a result announcement, if you want to buy an option, ensure you are able to hedge the option in case of an adverse movement to the extent of 5, 10, 15% if the underlying moves.
Investing in options requires caution. Always prioritize liquidity and do your due diligence to safeguard your investments.
Welcome back to Trading Hour. Well, the company in focus is Jupiter Lifeline Hospitals. Remember, it reported a good set of third quarter results. The company reported a 17.5% rise in revenues and a 20.5% rise in profit after tax. To talk more about this, joining us now is Ankit Thakkar, CEO of Jupiter Lifeline Hospitals. Thank you so much, Ankit, for joining us. First up, how did the quarter Q3 pan out, especially how are RPOP trends actually panning out, both in Q4 as well as FY26? What are the trends you are penciling in?
All right, so Q3 has traditionally been a weaker quarter on account of festivals and travel, things like that. So some of the elective work gets postponed in Q3. This year, the Q3 has did not see the dip that we usually see, and it has held up quite well. So the RPOB numbers in Q3 have also reflected the higher surgical volumes which we had as compared to the previous quarters.
Okay. So I think the derived average revenue per operating bed was about 61,700. Is that approximately the right number for Q3? What could that number look like? Because you're saying that Q3 is seasonally weak. What is the number that you're gunning for in the next 2 quarters?
So RPOB wise, I think Q3 does not, this year anyway, it was not lower as compared to the previous years. But going forward, the RPOB projections are pretty much to grow in line with inflation. We don't believe that there should be any out of the ordinary or exponential growths in RPOB. We think that the pricing and RPOB should both go in line with inflation.
Ankit, one question. Revision in insurance contracts for the Pune hospital as well as insurance tie-ups. Does this impact RPOB positively?
It will. They are due for, I think, the second half of this calendar year sometime. So once those get revised, definitely with change in pricing, RPOB should get impacted positively.
Ankit, you've embarked on greenfield and brownfield expansion. I think currently you have about 3 hospitals, but you've drawn up plans to make it to 6 hospitals. There's one in Dombivli, there's one in the MMR Mira Road, Bhayandar, and there's one in Bibwewadi in Pune. And plus there is expansion of bed capacity at your existing hospitals too, which is planned. So take us through step by step how your bed capacity will go up from current levels.
Yeah, that's right. So we have some bed addition in our current facilities. We were building some additional capacity in Indore because it had reached that 60% mark, after which we like to add some brownfield capacity. We are trying to build 78 beds, which was scheduled to be completed by the end of this quarter. But fortunately, our teams could finish it before time. So from 1st January, we have commissioned these new 78 beds in Indore. This gives us now an expanded base to ramp up operations in that facility. The Dombivli construction is pretty much on track, and sometime in the next calendar year, we should operationalize Dombivli. It's a 500-bed facility. We'll start with around 200, 250 to begin with, and then slowly ramp it up as it goes. The Bibwewadi Pune facility has now received the regulatory approvals for the municipal corporation, environment, etc. And from the next month onwards, we will be able to start excavation and then construction work there as well. Similar size and scale, 500 beds. We will start with about 200, 250 sometime in 28. And the Mira Road facility, we have just signed the land agreement a few weeks back, which should go on floor after.
Right. Ankit, we have a lot more questions. We'll get you once again on the show. Today we have paucity of time. Thank you so much for joining us. But let's now cut across to Shireen Ban in conversation with Hardeep Singh Puri at the India Energy Week closing ceremony.
The mood this time around is one of renewed confidence. There is, of course, a lot of global uncertainty that we are going to have to deal with and contend with, but the mood overall is a lot more positive this time around. But without further ado, let me get our 2 esteemed speakers here to give us a sense of what has been accomplished at the end of the India Energy Week. And Mr. Puri, let me start by asking you, sir, there was a lot of expectation in terms of what would be done at the end of the India Energy Week. The participation, as we've heard from here, has been significantly higher in comparison to year 1 and year 2. In the global context, with all of the uncertainties that we're dealing with, what do you believe the India Energy Week has been able to deliver in terms of tangible outcomes and next steps?
There are some outcomes which are easily measured in terms of, hard evidence. The amount of exhibition space you have, the number of participants, the number of technical papers. And I think whoever amongst us outlined a set of expectations, I can say with confidence, and I've got Pankaj here with me because Shireen is intimidating, so I have some help from Pankaj in case I need it. No, but seriously, it has exceeded my personal expectations. Shireen, I've been going around exhibitions since I was 4 years old. I've seen exhibitions as a 4-year-old in a major center in Brussels, in what is Belgium. I've seen Pragati Maidan, I've seen others. For the last 8 years that I have had the privilege of serving in the Council of Ministers, 3.5 years in petroleum and natural gas, I've been around the world. I've gone to ADIPEC, I've gone to GasTech. Each global platform develops a genius, a specialization on its own. But I can tell you with confidence, this is perhaps unique, it is different, it is larger. You don't have just petroleum and natural gas. You've had discussions here on green energy, major chunk on biofuels, a lot of emphasis on green hydrogen, a lot of discussion on compressed biogas, and I can go on and on. The innovations I've seen here, I have tried every day in my interaction with the press pointing out some of those mind-boggling new developments. Energy discussion is not a once in a year you meet somewhere and have a discussion. The purpose of this gathering, and I'm delighted, I've had ministerial panels, but I'm delighted to be here today. I see a lot of youngsters here. I don't mean just those who have won prizes, whose work has been acknowledged and appreciated, but I mean those who will benefit by the interaction with energy ecosystem participants from all over the world. And I think one of our efforts is going to be that what we have started here today in terms of scaling up, etc., we will do the dissemination of that throughout the year through interactive platforms so that when we meet in Goa for the 4th edition, I'm not saying this in order to make any claims. This is already the world's 2nd largest energy platform. But the remarkable thing is that it got to be the 2nd largest platform in the short space of just 3 years. Whereas the person holding the gold medal or the gold medal, it's been around for a long time.
Yes.
I never want to say that I want to get it, but I think we draw great strength. One major difference between this platform and the others, people go to Houston because it's a gathering of a lot of people in the gas ecosystem, if I may put it that way. They go to ADIPEC also because they do great networking. But they come to this platform to actually conduct business. Because the people who are there, and it's not important that one of these CMDs sitting here, I've gone public, they signed a deal with a Norwegian company to buy LPG at prices more competitive than what they've been getting. Or that yesterday an MOU was signed to use sorghum. When I was in Bangalore recently, we have signed up one of our companies, I think it's HPCL, to deal with the making of sustainable aviation fuel from seaweed. So if you look at the range of what is happening, And by the way, it's not going to be remaining in laboratories as test examples. You see the evidence of that in the commercial application. I'll just give you one example and then request Pankaj. Yesterday, I went to one of the stalls. I think it was the HPCL stall. They showed me a pretty simple, but somebody had to think of it, kit costing as little as 1,000 rupees, which can be used to on a two-wheeler or a three-wheeler in order to be able to make it fit for use of biofuels.
Right.
And the final comment on biofuels, and I say this because somebody asked me yesterday, a very bright academic and journalist, so by when will you have all these green hydrogen buses flying all over the roads? I said, hey, wait a minute. I became Minister for Petroleum and Natural Gas in June, July 2021. If you had asked me at that point of time, when will you really start using biofuels on a major scale, that means 10%, 20%, I would not have been so confident. We had a target of 20% biofuels usage till 2026. We've done it 6 years in advance, we got there. So my view is that the demonstrative effect of a new technology, yesterday we had an investors meeting, our own domestic guys who, affect the market and who contribute to it. Once you get this combination of innovators, manufacturers, consumers, you look at all the flexi-fuel cars which are on this thing. I mean, these are not prototypes to come on the commercial market years later. They are here. They are being marketed. And a flex fuel car, I mean, I was very encouraged, but I said it will become very expensive. No, it's just 40,000 rupees more expensive than the other one. So, for me personally, thanks to everybody who made it so, yourself, all the others here, I draw a great deal of satisfaction, and I say that with all humility, and I think this journey which we are navigating, because India is destined to grow, if you look at the kind of resonance that the bilateral meeting in Washington had, and I was just reading the agreement this morning. India is poised to grow, and this was the global, this is what the US CEOs told me, this was the, in their perception, the global growth opportunity, and this is where a lot of people can combine, some to sell us more energy, some to participate in our upstream, downstream, others to bring technology, take our technology. So I think one is truly humbled.
Well, I think this room is evidence of the fact that stakeholders here are not just on board with the story, but are also equally excited about taking the story forward. But Mr. Puri, I'll come to the Secretary in just a bit, but since you gave me the segue to address what's happened in Washington overnight, the meeting between Prime Minister Modi and President Trump, and a joint statement has been issued. And part of that, of course, is energy cooperation. President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on?
No, the first comment I want to make is that energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. All the ministers I met here, without exception, all want to participate increasingly and more comprehensively in the India energy district. Many of them want to sell gas to us. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase. And if there is other forms of energy available, I know there was a discussion yesterday on critical minerals,
yes.
On other forms of energy.
Nuclear included.
Oh, no, I'm coming. But the most important, apart from all this, because you will recall, Shireen, we went down the US-India civilian nuclear energy agreement. We also got, pursuant to that bilateral agreement, we got a India-specific IEEA safeguards agreement. We've signed on to that 54-member grouping, I think, called the Australia Group. I remember that. But no commercial contracting took place for reasons which were not anything to do with India or any other country. But today, when you're talking about small modular reactors, so you're talking the whole range. You're talking about petroleum, natural gas, you're talking about biofuels, the US is a major player. You're talking about nuclear, we talked about artificial intelligence, etc. When we met the CEOs yesterday, quite independent, and apart from the discussions taking place in Washington, one of them said that the US IBC want to set up a small informal working group with us to look at the application of AI. And then the words which struck me from that conversation were frugality, efficiency, and innovation. So it's a very, very positive thing. This is what happens when you talk to somebody who's old. I was a joint secretary on the Americas desk in the 80s. If somebody had told me at that point of time that India is going to be buying even $1 billion of energy from the United States, I may have fallen off my chair. Everything then was looked at in terms of the prism of the Cold War. Today, we've had fantastic meetings with the US IBC. We've had excellent meetings with representatives and ministers from the Gulf, with people from Latin America, Petrobras, oil, OIL, Oil India Limited, cooperation in the Andaman Sea for deep water offshore, them helping us in seismic surveys. We've had discussions with the Russians, excellent big delegation. There were 100 people from Brazil, by the way. So I think there must be some thing that they get, that's why they will come here. It's a very new platform, but it's a growing and it's a dynamic platform. But I would like Pankaj to share with us some of the agreements which have either been doing, but before I request him, I want to tell you that one of the most satisfying meetings from my point of view was a clean energy ministerial with my distinguished colleagues from countries we don't have the benefit. You know, there are 2.8 billion people in the world who still use firewood, charcoal, or kerosene, etc. And the work plan that we charted out, that is between now and when we meet next year in Goa, I think that gives you a lot of satisfaction, because I think the Indian model is more easily replicable in the global south, because the development challenges we face are similar. Unlike the highly advanced countries, you know, where they've already moved way ahead on some of these issues.
No, fair enough, and I'll come back to that in just a second with Secretary. If we can build on the business outcomes that have been achieved, as the Minister pointed out at the end of the India Energy Week, some of the MOUs he did talk about. There are many others. I can see the chairman of EIL sitting here. They've signed an MOU with BP, for instance, and there have been many others that have been inked through the course of this week. If you can run us through the tangible outcomes from a business perspective at the end of the India Energy Week.
So if I were to categorize them into different buckets, there are a set of agreements which have been about supply, say, supply of crude, supply of LNG, supply of LPG. Now, these have happened with a variety of entities across the world, across various geographies, so whether it is South America, it is Europe, or it is the Middle East. So that's one set of agreements which has happened. There's another set of agreements which are, for example, about services. So there are people who are on the software side working in refineries. Say, for instance, somebody is helping set up a digital twin of an entire refinery to see what you can do. So that is, again, very cutting-edge work, absolutely on optimization, absolutely on efficiency gains. So that's the second. The third set of agreements has been on services, the kind which you mentioned, say, EIL doing. There's been another bucket would be on exploration.
Right.
So on exploration, the fact that it's around the same time that we have launched round 10 of the OALP, the
largest offering anywhere time in the world.
Which meant that it's not just Indian companies. It's so big that everybody is interested, and everybody is going to sit together with somebody here, or somebody has to sit with somebody else, because we need the best of expertise in the world, and we need it yesterday. So that's the enthusiasm which you see happening all around.
I want you to build on that, Minister, what we just heard there from the Secretary in terms of the interest coming in as far as exploration is concerned. You pointed out this will be the largest round that India puts on offer. What's the expectation? What are the broad timelines that we're looking at as well?
First of all, the scale of this 10th round of open acreage licensing policy. If memory serves me right, the bids are over an area of 200,000 square kilometers. 200,000 square kilometers. The interest is also partly fueled by the fact that over the last few years, we have been making important changes in our own regime. It started way before I came, when we moved from production sharing agreements to revenue sharing agreements. And it culminates, or will culminate, in the new law that we have passed in the upper house. Shireen, we used to have a law in 1948 which dealt with mining, quarrying, and we were covered. Then many years later, I think 1976 or so, they passed a separate one for mining and quarrying, but we were still stuck with the old one. But it's not just a change in the legal or the legislative framework. What is there is that these changes have been carried out after widespread consultations with all the players. Our own domestic actors, the global actors, and our mindset today, which is exemplified by the Honorable Prime Minister's approach. Look, if something more needs to be done, come and tell us. We will deal with it. And today you have a situation where, well, you used to regard the public sector as a little, boring. It's like the bureaucracy, but it's all changing. Modi's India, the PSUs are very dynamic. I don't see. But why I'm telling you this is, I know of one case where ONGC is bidding for some block along with BP and Reliance. Now, to me, that is a very strong message of cooperative or collaborative joining of hands. It's a one foreign partner with OIL for the Andaman says, you've got other people here. Why was this possible? Why has it become possible? Because out of our 3.5 million square kilometers of sedimentary basin, we opened up 1 million square kilometers some time ago, and the bids which came in for the 9th round, which was the prior to this, had 38% bids come in that area. My expectation is that this one will be even bigger, and I make that assessment based on the discussions that my colleagues in DGH have had with others, the queries which are coming in. I base it on what the ministers whom I meet tell me, not only here but elsewhere. Timeline is what you asked me. this bill will come up in the Lok Sabha when it resumes, and I think we have a sufficient majority to make sure that it sees the light of day.
Well, and that the Parliament is, of course, broken for recess, but we should be resuming next month, so that gives us an broad indication of the timelines
10th
that we're...
March, I think, is when the
that's correct.
March, and then those next 3 weeks, it will be done.
That's correct.
Well, welcome back to Trading Hour. Well, one particular stock that we just highlighted some while ago was Concord Enviro Infra. This particular stock now locked at the lower circuit. It's a recent listing. This particular company, all the revenues were flattish on a year-on-year basis on account of significant impact that the company saw from some of its customers abroad. The company has seen significant margin erosion, and on the back of that has seen a loss on the bottom line. The stock locked in the lower circuit. But time now for a short break. We'll get you more on the markets on the other side.
Welcome back. We're hovering around 22,900 on the Nifty. It's a triple-digit cut. The key level to watch will be 22,750 to 22,800. The markets have formed a double bottom at that range, but closer to 22,800. We've defended it in the previous round of selling pressure, attempted a very feeble rebound. That's an important support to hold on to. But let's see whether that stays. The small cap index is now hurtling towards a 3% loss. In the last 1 hour, Bajaj Auto and Eicher Motor have extended their losses. And Eicher Motors is down 12% this week. In fact, autos have been the biggest casualty this week, but Eicher is down 2% today, 12% gone for the week, and even a Hero MotoCorp. That's the other big loser for the week, with a cut of close to about 8%. Senco Gold, we've been talking about it, where the company's margins came under severe pressure because of the one-time customs duty impact of 70 crore, which hurt their EBITDA. Senco is down nearly 20%, and even growth for the company slowed down. So the company's guide has done 22% top-line growth in the first 9 months, and for next year, they're talking about 18 to 20% kind of a top-line growth. Deepak Nitrite is the other big loser. I think the management does expect some pickup in profitability in Q4, but the conference call is only on the 17th, so the street will be tracking that very closely. And Manappuram Finance has underperformed its peer Muthoot. Muthoot was such a big gainer yesterday on the back of its numbers, but today Manappuram is weak. But let's talk about United Breweries, because that reported a double-digit revenue growth in a seasonally weak quarter. Profit after tax, though, was impacted by an exceptional loss. Vivek Gupta, Managing Director and CEO, is now with us on the show. First, if you could talk about the Telangana issue. What was the price hike in Telangana, and how much does it impact the operational performance by you, according to your initial estimates?
Yeah, good morning, and thank you for having me. I think Telangana, yes, as you know, 2 days back, we have got a price increase of 15%. Unfortunately, the consumer price has also gone up more than 15%. So we will have to actually see the impact of how much that impacts the volume. But based on our initial estimate, this can actually impact our gross profit by almost 100 basis points. But we actually want to, as I said, we are here to be category maker versus category taker. So we definitely need to reinvest, in Telangana to really make sure the affordability for the consumers is there, and we can really drive further premiumization there. So, but I do expect, 80 to 90 basis point impact on our gross margins.
Well, talking about Telangana itself, which comes around 15 to 17% of your volumes, it's a timely hike coming ahead of the season. If you could give us a sense of this 15% hike, if you have done any initial estimate, how much could be the negative impact of volumes be, and as a result of which, the impact on the net realization?
Look, I think from an overall perspective, I would say that, it has been extremely difficult for us because we always wanted to serve the consumers there. And even with the 15% price increase, the cost structure is still not very, very structurally competitive in Telangana. Having said that, I would think the consumer impact is going to be slightly on the higher side because there's a 30 rupees increase in the price of bottle. But we have to see, because there is always a balance between what is the real demand in Telangana versus the capacities available. we have always operated our plants at the full capacity, and there was always a shortage of supplies because the demand was higher than what we could actually supply. So we will have to see the correction. It's too early to say, how consumer react to it. I think, a manageable 10-15 rupees price increase, we have the data on how much elasticity would be. It is very difficult for me to predict, but we will be actually tracking it very regularly to come back maybe by next quarter, how much impact we have seen because of the consumer pricing. Right now, we are assuming that we would be able to meet the demand and utilize our full capacities.
Okay. What about the receivables, Vivek? What is the current outstanding and how much have you received since the issue started?
Look, I think we have been getting regular payments from September onwards, and that is what the government has shared. We still have an outstanding, almost 80% of the outstanding what it was there, in December. So we have made some progress, and we have, I think, government and the Telangana Corporation has assured us that over the next few months, we will be getting the old outstanding on a regular basis. But the issue has actually moved in the right direction, and our outstanding has been reducing, not at the speed we want, but it has been reducing over the last 2 months.
What is the exact outstanding amount right now?
See, because we have old outstanding dues and we have a regular business dues of the 45 days. I don't have the exact number, but it is in the range of around 600 crores.
600 crores. Now let's get to the quarter. Now the quarter was challenging, but your premium products did extremely well. 8% overall volume growth is what you've got. How much of this do you think is on account of the new excise policy in Andhra, and how much of it was organic?
No, first of all, I'm very, very pleased with the performance in the Q3, because as you know, in many parts of the country, we had very strong winters this time and delayed winters as well. And also the affordability is becoming a major issue on beer, like states like West Bengal, where the beer has become very expensive and it is really impacting category. The uncertainty in Karnataka around the excise policy during the last quarter where the category was declining. All of this, despite all these factors, our volume grew 8%, our premium grew 33%, and we actually grew market share nationally in the country. So I'm very, very pleased with the performance. Even if I take Andhra and TN out, our volume growth is 8%. So it's a very broad-based growth. I was reviewing the data by region, North, East, West, South. We grew volumes in all the regions. We grew volume in almost 80% of the states. As I mentioned, a couple of states where the affordability became an issue and excise policy reduction like Karnataka and West Bengal, we declined. But most of the other states, we registered a growth. So it was a very, very broad-based business. On your question on Andhra, we are seeing a good growth on Andhra. But we invested a lot in Andhra in making sure our brewery there, we invest in repair and maintenance so we can prepare for the season, because the volumes are picking up, but we had to invest in making sure our plant can produce more beer. And hopefully from this month, we will actually see an increase in our production in the plants because of the investments we put during the last quarter in Andhra Pradesh as well. So on your question, I would say, the growth is very broad-based. Andhra did have an impact, but even if I would take Andhra and Tamil Nadu out, we are still at 8% volume growth nationally.
Right. So double-digit volume growth has been your target. How long before you can reach that double-digit target?
Look, I think we are very excited, with our revenue growth of double-digit. I think the big challenge on the beer is affordability. In the last 3 months, most of the state governments have been increasing duties on beer, and the price of beer is becoming expensive for the consumer. And that is one of the things we are really observing and working with the regulators to really bring the data to them that, beer is what we really want to drive the category growth. It is right for the moderation. It is right for the social connections. So how much that price elasticity will do is something to be observed. But we are actually geared up to at least prepare for a double-digit growth in the coming season.
Okay. Now, with raw material prices expected to be stable with agri output, etc., and increased premiumization, what is your margin target going forward?
Yeah, I think a couple of things. I think first is we are still dealing with a lot of volatility. I think one based on what's happening in US and the dollar impact is going to have on things like importing of cans, importing of some of the materials. So there is. I won't agree that the commodity prices are very stable. I think it's very volatile, and there's a lot of uncertainty around that. Second is to drive the growth. We are actually putting a lot of new bottles in the system. As you know that we actually get almost 70% recycled bottle. But as we are growing the business, we are launching new brands, we are investing in premiumization, and we have a big premiumization agenda where we would really like to further accelerate our growth on premium brands in the coming season, which means we'll be putting a lot of new bottles into it. The third is we continue to invest in category growth because we continuously need to make sure that consumer understand and beer is available. The new stores are going to get expanded in UP, and we are going to make sure we are servicing those stores. So I would say that we will be gradually increasing our gross margins. You will not see big spikes in the gross margins, but we'll definitely working on a plan where we continuously improve our structural profitability.
You spoke about the gross margins. Do you have any EBITDA margin targets?
No, we do have EBITDA margin target. Year to date, we are, around 7.7% on EBITDA. We want to get, in a couple of years closer to 10%. But we will, as I said, we have to be the category maker. We have to get the fundamentals right. We need to continue to accelerate the growth. I'm very pleased that for the full year in 2024, our premium business has grown 34%. And it has actually quadrupled to do that. We want to further accelerate this growth. We brought the new innovation of Amstel Grande in few states. We are going to expand it into other states. And at the same time, affordability is a challenge. So in Karnataka, we decided not to take the price increase of Kingfisher, our lead legendary brand, despite the duty increase, which was a big call. But we wanted to make sure that consumers, they love their brand and they don't switch out of the category. So as I said, that affordability is the biggest challenge, and there will be volatility. So we do have a target and aspiration, but at minimum we'll continuously to make a very positive progress on both the margins and EBIT.
Got that. On the premium part, if you could give us a sense, what is the contribution of premium right now in your overall mix? And with the kind of growth that we're seeing there, higher than the category growth, what could that number go up to, increase to? What is the aspiration here?
Yeah, sure. I'll answer in a different order. I think Heineken, absolutely. We actually grew Heineken by 61% in the last quarter. And the markets where we have Heineken and Heineken Silver, we continue to grow penetration and continue to grow share. Consumer love Heineken Silver. And we are actually looking at how do we expand the capacity. We made an announcement yesterday that we are going to actually invest in our greenfield brewery. Maybe after 10 to 12 years, UBL is actually investing in a new brewery of its own. And we are going to produce Heineken there locally as well. So very buoyant on Heineken brand. Amstel Grande, we launched in 2 states of Maharashtra and West Bengal. Our initial results are fantastic. We are almost getting 40 to 45% repeat rates. And remember, we launched it in slightly off season and we are getting into the season. The distribution is really picking up. The consumer feedback on the product is outstanding. We are actually registering the product in a couple of other states, like Karnataka, to expand, and in Uttar Pradesh as well, to really expand Amstel Grande at some point of time. So extremely positive on the initial response, but of course we have to do more work in a dark market to still build awareness about the brand. On the overall premiumization, look, it's still a very small part of our business. But the good part is we are actually growing shares on premium versus our competitors in the market, and we're also growing the market. So we have actually moved the needle. We are almost now 20 share on premium of the premium segment, but it is still 7 to 8% of our total business. Our aspiration is premium has to be around 15% of our business in the next 3 to 4 years, and that's why we are actually not even happy with the 34% growth we are getting. We want to double this growth rate with the expansions we have over quarters to come.
Thank you so much, Mr. Gupta, for joining us, giving us a sense of how Q3 panned out, the outlook as far as FY26 is concerned. Remember, United Breweries holding very strong in a market that's very, very weak. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.